Most first-time buyers don't see this document until they're sitting at the closing table. It's too late. This is a real ALTA settlement statement from an Arlington condo that I closed on earlier this year. The names are redacted, but the numbers are real. It's a $287,500 purchase price with a $230,000 loan. I'm going to walk through it line by line, explain what every section means, and show you exactly what you should verify before you sign. So the structure is pretty simple. The document has two columns. The seller's on the left and the borrower. That's generally who the audience is here. That's you. That's the buyer on the right side. Every line is either a debit, money out, or a credit, money in, or it's already accounted for. Everything rolls into the two numbers at the bottom, which is the cash due from the borrower and the amount due to the seller. Everything in between is how we get to those two final numbers. You don't have to memorize every line, but it's good to understand how you get to those final numbers. So here we have the purchase price, $287,500. It's a credit to the seller and a debit to the buyer. This is a ledger. That's what this is. Next, we have the earnest money deposit. That's a $10,000 deposit that's transmitted shortly after ratifying the contract, going under contract. It doesn't disappear. It appears again as a credit on your settlement statement. And you have the loan amount, $230,000. That's simply the money that your lender is going to bring to the table on your behalf. For this particular deal, we negotiated a seller credit, which is a debit to the seller and a credit to the buyer, and it goes directly against the buyer's closing costs. So that's nice to reduce your cash at closing. And we have a tiny lender credit of $14. In certain situations, that credit can be higher. The main thing here in the financial section is you want to verify that the purchase price corresponds to your actual sales contract, and any seller credits, either from the home inspection contingency or negotiated outright, are reflected here. Prorations. Prorations are basically just bills split by the number of days each person owned the property. For the condo dues, the seller had already paid the month, so the buyer reimburses them for the days after closing. Property taxes work the opposite way in Virginia because they're billed in arrears. So the seller owes taxes for the time they own the home, so the buyer receives a credit now and pays the tax bill later. That's the same principle both ways. Whoever owned the property during that time pays for it. Moving down, looking at the loan charges, that's where the lenders make their money. This transaction, we have approximately $3,000 in lender fees, administration fees, processing fees, condo fees. The appraisal fee. So the appraisal is generally paid out of pocket by the buyer earlier on in the process. So you see it's paid outside of closing by the borrower. These are all negotiable, and you should pay attention to these, and they should match the initial disclosure that you got from the lender in the beginning. But again, negotiable, right? One thing you can do is you can ask, what is the credit valuation bundle to exact this, Mr. Lender, and force them to explain it. And it kind of gives you a little bit of leverage to negotiate them down. Prepaid interest, this one confuses a lot of people. You're paying interest from the day you close the loan through the end of the month. That's why your first mortgage payment usually isn't due until the following month or the month after. If you want to double check it, you multiply your loan amount by your interest rate, divide by 365. That'll give you your daily interest amount. There'll be some small differences in rounding, but it's good to look at that. The lender and the title company are going to balance numbers against each other, but they're human beings and they make mistakes. Next, we go to impounds. These are essentially escrow reserves, right? So the lender is collecting a few months of property taxes and homeowners insurance up front. So there's money in the escrow account so that the mortgage servicer can pay those bills when they come due. These aren't lender fees. It's still your money, it's just being held for future taxes and insurance bills. Going down, title charges and escrow settlements. So the total title charges here: 35, 690, 1275, 275. They amount to $2,700, and the settlement fee here, 1275. That's what the title company charges you to handle the closing. Title companies, they tend to add a lot of junk fees. Essentially, this title company that I like to use, they have less fees. They just consolidate it into one fee, so it's easier to understand what's going on. But yeah, title companies are often overlooked by buyers, and you can shop for title companies. You could save some money. You can negotiate with title companies. You can have them match quotes that you receive, and you can save quite a bit of money that way. I have a deal right now where we negotiated title fees down $1,000 by providing an alternate quote. So it can be significant. As far as the actual line items here, besides the title company fees, you have lender's title insurance that protects the bank. It's mandatory. You can't get around it. And then you'll have your own owner's title insurance, which protects you against anyone claiming that somebody's great grandmother saying they actually own the property. In reality, title insurance is one of the least utilized, least claimed types of insurance in the country. But it's still good to have that. Another thing you can do with the title companies is you can ask for a reissue rate, which is essentially if there was title insurance written in the past 5 years for the property, they can use that old policy to give you a discount. But most title companies aren't going to check that automatically because it's not in their favor to do that. Commissions. So in this case, we have the listing agent's commission, 86.25, 3%. Same with the buyer's agent. The selling agent is the buyer's agent. And then the listing side charged a flat $3.95 transaction fee. And the seller paid for all of these commissions, which are, of course, negotiable as well. But you want to check to make sure that this commission to the selling agent, to the buyer's agent, matches what your representation agreement says. You want to make sure that there's nothing funny going on with that. Government recording and transfer taxes. These aren't negotiable. They're set by Virginia law. So generally, this is how it works. The seller will pay the grantor's tax, and the state county transfer tax will be split, and the recordation tax is paid by the buyer as well as the recording fees. Okay, so we got miscellaneous here. This is where you can find some surprises, right? So with deed prep fee to Tanny Law, this just means the seller paid their own attorney to prep the deed. It's only a debit on the seller side. And we have 12 months prepaid homeowners insurance premium, and then we have HOA fees for March for this property. The HOA fees are $1,034.03. Move-in fee, $75. Move-in deposit. It's to reserve the elevator for this building. It's good to know about these before you get to closing. And then we get down to it, there's a credit from the title company as well. May have been negotiated, maybe not. But once we get to the bottom here, we get to the truth of it all. So these are the numbers everybody cares about. due from borrower 50,308.71. So that's the down payment plus all the closing costs. And due to seller 260,589. That's their net on the 287,000 purchase price. This 50,308.71, that's the wire amount that my client sent to the closing company, to the title company rather. So in total, the buyer paid 50,308.71 plus the 10,000 earnest money. So in total, my client paid 60,308.71. Yeah, so I mean, like, you really want to see this at least 48 hours prior to sitting down at the closing table. It doesn't always work out that way, but you want to be on top of this so you don't have surprises because errors happen. And if you're correcting them at the closing table, it's too late.